Investment banking salary. How much do bankers actually make? Not sure if grinding day and night for an investment bank is worth it? Wondering how much an analyst can earn after an 80 to 90 hour work week? Don't worry, we've got you covered. But first, take a guess. 55,000? 85,000? 135,000? Which one is it? Many say it's 85,000, but don't bankers have like a six-figure income? So the answer should be 135,000, right? Well, the first is not wrong, but the latter is no more accurate. Why? Because there are many factors deciding how much bankers earn. So what makes up bankers' total compensation? How can bankers make so much money? And how does the compensation progress as one climbs the corporate ladder? Investment bankers' total compensation breakdown. Usually, a banker's total compensation is made up of two things: base salary and bonus. This explains why many say that banker's salary is $85,000, because that's the base. Yet, the attractive part of bankers' compensation lies in the bonus, as that's what gives them the six-figure income. Now, let's take a closer look at each component. Base salary. This is what bankers earn via paycheck or direct deposit bi-weekly. It increases a bit each year. The good news is that it's a stable, fixed income source. So if you happen to perform quite badly, you earn that same amount. But with the good news comes the bad. It does not change even when you're the best performer. Bonus. Bonus, on the other hand, depends greatly on performance, but it's not just your performance. It has to be both yours and your team's performance. If you're a rock star, but your team is not closing deals and generating profit, your bonus suffers anyway. Bonus is either paid in a lump sum, often at the start or the end of the year, or paid out in two parts, one at the start and the other halfway through the year. Besides performance, seniority and type of bank are also decisive factors in the types of bonus you receive. And there are four main types. Stub bonus is what you get your first 6 months on the job if you're an analyst or an associate graduate from university or MBA programs and start working in the middle of the calendar year. This bonus is typically a low percentage of year one base salary, usually 20 to 30%. End of year cash bonus is what you earn after your first full year of work. As the name suggests, it's paid 100% in cash. At elite boutiques and middle market investment banks, the bonus remains 100% cash when you move up the ladder. But at the bulge brackets and other publicly traded banks, a high percentage turns into deferred stock-based compensation. Cash bonus fluctuates more heavily as it relies on deal flow, performance, and industry-wide compensation. It can be as low as 50% of your base salary, especially for analysts, or as high as 200% or more the more senior you are. Stock-based deferred bonus is what you get as a year 2 or 3 associate at larger publicly traded banks when a portion of your total bonus, around 20%, is deferred and paid in stocks that vests over 3 to 5 years. This deferred percentage will increase as you move up. Banks do this partially for regulatory reasons and partially to incentivize you to stay at the firm. Signing bonus is the last of these types. This applies to analyst and associate graduates with a full-time offer. Analysts often get around $10,000 to $15,000, while associates earn $50,000 to $60,000. How can investment bankers make so much money? When people first learn of investment bankers' salary, many are amazed at how much bankers earn. To outsiders, investment bankers are those who do mundane tasks, like making PowerPoint slides or building financial models. It sounds absurd that you can earn 6 or even 7 figures. Yet, the answer is simple. It's all about the business model. Once you understand the model, you'll see why bankers can make so much money. But first, make sure you know what investment bankers' jobs are. Their main tasks involve advising companies on financial transactions, mergers and acquisitions, and raising capital through IPO or issuing bonds. Each transaction, in bankers' own words, is called a deal. They earn money through the advisory fee paid as a percentage of the deal's value. And these deal values are often very, very, very big. Goldman average M&A transaction value in 2019, for example, was $3.6 billion. Deals worth less than $1 billion might come with a 1% commission. while deals worth more than that will scale down to around 0.1%. But even 0.1% of 50 billion is 50 million. After all, the advisory fee earned is not for an individual, but the whole deal team. So let's dissect how the money is distributed using the case of Facebook's acquisition of WhatsApp. In 2014, Facebook's acquisition of WhatsApp was worth $19 billion. Facebook hired boutique investment firm Allen & Company to assess WhatsApp's value, and WhatsApp, in turn, hired Morgan Stanley to advise on its sale to Facebook. According to Freeman Consulting Services calculation, this deal brought Morgan Stanley $35 to $45 million, while Allen & Company earned between $32 and $41 million in fees, which were only about 0.2% of the transaction value. Assuming $45 million went to Morgan Stanley, to make it simple, 60% of $45 million went into paying things like back office salaries, administration, real estate costs, etc. Then the remaining 40%, or $18 million, went to those directly working on the deal, aka the deal team. An official deal team often has a smaller number of people: one partner, one managing director, one vice president, 2 associates, and 2 analysts. It is very common for deal teams to consist of bankers from across product or coverage groups, depending on the type of deal or engagement. In Facebook and WhatsApp's case, say Morgan Stanley brought in 3 teams: the TMT, Technology, Media, and Telecommunication; the M&A, Mergers and Acquisitions; and the LevFin, Leveraged Finance. Then in total, there would be 3 partners, 3 MDs, 3 VPs, 6 associates, and 6 analysts. A rough calculation would split $18 million as follows. Analysts, $70,000 per person. Associates, $120,000 per person. Vice presidents, $200,000 per person. Managing directors, $700,000 per person. Partners, $4.7 million per person. And this is for just a single deal. Insane, right? In fact, investment bankers can work on multiple deals at a time, which makes their pay even higher. Of course, since deals information is confidential, these numbers are just estimates of what they earn. But these estimates are close enough to explain why bankers make so much money. And this business model is what turns investment banking into one of the most lucrative jobs in the finance industry. How compensation progresses as one climbs the corporate ladder. We all know that the higher the position, the higher the salary. But how high is high? Well, to answer that question, it helps to know the career path of an investment banker. A common pathway begins with working as an analyst for 2 to 3 years, then another 3 years as an associate. Now that you have some management expertise, the next step is to become a vice president. After 3 or 4 years managing teams and becoming a high-level salesman, you can land yourself the position as a director and called senior vice president. Then 2 to 3 years pass. If you can justify your performance, aka bringing in the most deals for the banks, you climb the last stairs to become a managing director. So, with this common pathway in mind, let's explore the compensation as you level up your career. Analyst salary. The standard progression for analyst base salary is $85K, $90K, and $95K over the 3-year span at bulge bracket banks, with bonuses ranging from 50% to 100% of your base salary. However, if you start at a regional boutique bank, your base salary might be closer to $70,000 or $75,000. It's possible to earn $100,000 at that level, but it will be a closer call. Also, accepting a full-time offer often earns you a $10,000 to $15,000 signing bonus. Afterwards, the annual bonus comes down to your type of bank and your performance. Associate salary. At the associate level, base salaries tend to start around $150,000 and progress up to $200K in $25K annual increments with some variation. They could be $10K to $30K different from what you see above, depending on the bank. For example, some associate might start at a lower base salary in the stub period, such as $125,000 or $140,000, and then move up to $150K in their first full year. Bonuses are usually around 70% to 125% of base salaries at this level. One special thing about this level is that one can enter a bank as an associate without being an analyst. Thus, associates also have a signing bonus that is larger than analysts, ranging from $50K. Once you start getting more senior, usually as a third-year associate, part of your bonus will be deferred. Say you got a $200,000 bonus. Then, approximately $60,000 of that will be granted in restricted stocks that vest over 3 to 5 years. This means that after the following year, you will receive $20,000 in shares, or based on the stock price times the number of shares you get during your bonus time. Vice President salary. Vice President is a stepping stone in your career as compensation starts to rise significantly, with more and more of your bonus granted in stock. A base salary of $200,000 to $300,000 is within reach, while bonuses range from 100% to 175% of your base. Now, your pay is largely determined by your individual revenue-generating performance. Director salary. Most banks will give directors a base salary of $275,000 and a bonus of up to $300,000 to $400,000, depending on performance. You are now in full charge of running deals brought in by managing directors. The majority of compensation is now the bonus. Making it to the next level requires proof that you can maintain relationships with clients and potentially bring in new business one day. Most of the job is spent executing deals and trying to build relationships with new clients. Managing director salary. Managing director's compensation is highly variable because the year-end bonus could be almost anything. It's all about performance with regards to the type of deals you close and the fees you generate. So average compensation at other banks no longer matters. Yet, for your reference, base salaries can range anywhere between $400,000 and $650,000, while the year-end bonuses can be as little as $100,000 in a bad year or as high as 7 figures in a good year. On average, across all banks and firms in the U.S., managing directors with great performance probably earn around $1 million. Plus, bonuses will be deferred even more to keep seniors from leaving the firm. So if you want cash, not stock, it's better to work at a privately held elite boutique bank. Now that you have the big picture of investment banking salary, it's time to decide whether that money is worth your time and effort. If the answer is yes, don't hesitate to visit bankingprep.com to find answers to any other questions you have about investment banking. We have in-depth guides and prep materials to help you land the job. If you find this video helpful, don't forget to like and subscribe to our channel. Leave a comment down below if you have questions or suggestions for our next video. Thanks for watching.